Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the chart, figure out what's happening and what we can expect moving in to next week and essentially for the rest of the month. So as usual, if you enjoy, don't forget to hit that like button as it does help a lot. This is not financial advice. I'm not a financial advisor. And of course, my membership section is live on YouTube. The link is below for $3 a month to get my access to my intraday thoughts on Tesla as it's moving throughout the day. And yeah, if you're interested, the link is below. We're getting kind of close to 300 members, which is great to see, but nonetheless, down below. So let's jump into it. Tesla closing the day in just a few minutes here, looking like we'll be up about 0.5% or 0.5%, we'll say, which compared to the market is maybe, ever so slight outperformance, nothing major. But well, with that being said, we did have a beautiful day today overall in terms of a reversal. So yesterday we talked about how, we pretty much got rejected at the overall level we've been talking about. We're at 245. I've been telling my members about this for a while, 240 to 245, anywhere in that range, right? Got rejected at that level. We came right back down, which was expected. Got below the 50-day moving average. And then, like I was saying, I expect us to retest the 21-day or 21 EMA, essentially. And that's quite literally what happened today. This is pretty much like absolute perfection. Like literally, like you can like zoom in on this and it's like almost exact, like to the dollar almost. Like just it was off by like 10 cents, right? Perfection. I did buy that dip. I did sell a little too early on my little trading shares I like to kind of mess around with. But nonetheless, it's pretty much textbook. Like it's just absolute. Just textbook, like it's all it is, right? Not only do we come back down to the 21 EMA a little bit faster than I expected, I will admit, but nonetheless, we came back down to it already. We came to retest it. We came to the 226 level. And this is what I was telling my members, right? Just today, how, where is it? I was out all morning, but I think it was this one here, right? How I want to see 226 and the 21 EMA pretty much hold. And that's exactly what happened, right? And the reason is two reasons. Number one, simply it's just a retest of a breakout above the 21 EMA because we broke down below it way over here. Then earnings happened. We continued going below. It came up, retested it, rejected it, and then we finally closed the candle above, had that beautiful rally, and then of course came back down to retest that breakout above the 21 EMA. That's number one. Beautiful retest so far, so good. Second thing is, of course, a retest of the other kind of, resistance area that we broke out of, which was about 225-ish, right? 226, something like that, which is where all these candles up here constantly got rejected and really couldn't close any candles above. And then, of course, as we finally broke out, right, we came back down to essentially retest that general rough area, which is, again, about that 225, 226 level. Pretty much exactly where the 21 EMA was, so they lined up beautifully, and we bounced off of both of those and essentially did an SR flip, which is a support/resistance flip, where we turned what used to be an old resistance, aka that 22625 level, the 21 EMA, went above it, and then we turned it into both of them into a support, and at least so far, it's showing some solid promise. So that's number one. That's beautiful. That's just pretty much sometimes that's all you really need when it comes to trading. Like too many people like to overcomplicate with a million different indicators. Sometimes the basics is all you need. And that's pretty much just straight up textbook basics. Like that's just trading 101, right? And that's exactly what happened. And that's beautiful. I like that. And we had a very strong bounce, went from red to green. I think we were red like, let me see what the red percentage was from yesterday's close to the lowest point of the day. Yeah, about 3.5%. We went from 3.5% red to up slightly, which is pretty darn good if I do say so myself, right? Especially with this whole Elon drama happening right now. Now, the question is what happens next, right? Well, I personally believe that what's going to happen next is as follows. Well, I think we're going to be pretty much ping-ponging between the 50-day moving average, which is this orange line up here, that's currently sitting at about 240.5, right? And the 21 EMA, which is at the very moment sitting at pretty much 226, almost 227, right? But 226.5, we'll say, right? I do believe that for the next couple of days or so, I wouldn't be surprised to see a ping pong between those two, right? It's kind of what we usually see. We've seen that many, many times where Tesla kind of just ping pong between two major indicators and then it eventually picks the direction. I think that's going to happen. I think we'll set up some momentum here. I think we'll have some sideways consolidation here for maybe the majority of next week or at least a few days. That really wouldn't shock me, but I would expect for like maybe at least half of next week, honestly, maybe all of next week. But then I think from there, we'll pick a direction. And I personally do believe that that direction is going to be up personally. Again, the way to kind of confirm that is as long as we stay above 225, 226, personally, I think the likelihood of the direction being up is much more likely. Right? That's what I personally think. If we break below 225, 226, then the 200-day moving average is next, which is somewhere around 222 right now. If we break below that, the bullish thesis starts to fall apart. But if we stay above those levels and we also break back above 240 to 242 and start closing candles there again, I think that is going to be a very good confirmation, and it's not going to be a fake out like this one. I don't think we'll hit two in a row. I think if we do it again, I think it'll be a much more confirmed that it'll be more I'll be more confident in it, I guess is what I'm trying to say. So that's kind of what I'd be expecting. And if that were to happen, of course, we have the 100-day moving average right above that, sitting at almost 250, which I think will come up to retest more concisely, if that makes sense, right? But ultimately, I really wouldn't be surprised if we essentially break into the 250s and touch this top part of this overall bull flag, right? That's kind of what I'd be personally looking at right here, right now. Taking a look at the weekly, right? Now that the weekly candle has essentially closed, we can see let's get this indicators out of here for now. The main one I care about on the weekly personally, I guess the 100 is okay, right? We're kind of getting rejected by it right now, but the main one I personally care about on the weekly is just the 200, which is the green line, right? That's the only one I truly care about, and we bounced off of it for the past 3 weeks, which is phenomenal to see. Now, as I talked about yesterday, I believe it was, we still have this squeeze indicator on the weekly showing that we have 7 weeks in a row of red circles, which essentially means that there's a lot of pressure momentum building up even after the drop after earnings. Apparently, I mean, according to this, it's still building up. Personally, I also believe this to be a potential to go up rather than down. Just my opinion, of course, right? I do believe there's a higher percentage of that because on top of everything else, we're still we're still technically in this overall head and shoulders, inverted head and shoulders more specifically, which is the bullish variance where we have the left shoulder, the head, and then we have the right shoulder. Pretty much just perfection, and it's happening in a downtrend. You always want to see these happen in a downtrend, right? If you see something like this happen, but it's in an uptrend, like at the top, for instance, that doesn't count. This has to happen in a downtrend. And that's exactly what's been happening ever since all-time highs. We've been in a downtrend, right? We've been going down like this for quite some time, right? And that's what I want to see broken. Now, the beautiful thing about this, and the thing that kind of coincides really well, is there's 2 things. First and foremost, in order to execute this inverted head and shoulders, and for this pattern to play out, which would be an exceptionally bullish pattern if this plays out, very bullish. I think Tesla will go on a massive rally to the point where it won't even matter what the fundamentals are. It's just going to be just a massive technical rally. I really do believe that'll happen if it, of course, breaks out and plays out. That's number 1, right? It's a big if. You never know. Things can change. But if it does, that'll be phenomenal, right? But the point I'm trying to make here is the fact that in order to really truly trigger this inverted head and shoulders, we ideally want to be breaking above 300, in my opinion. Above 300 at the minimum, like I would say minimum 280s. Minimum 280s, ideally 300. That's kind of like roughly where that neckline is. That's what you really want to be breaking in order to execute this pattern, right? And in theory, again, just for fun, if this happens to play out and we, let's say, break out, technically this can bring us back to new all-time highs, right? This can bring us back into the 400s. Obviously, it'll take time. It's not going to happen literally over the next day or something like that. I think it'll take, if it happens, you know, let's say somewhat soon, I think it'll still take like the majority of next year to play out. But the point is if it does happen, it's very bullish and very, it'll be a very nice rally. On top of that, we also have, of course, this massive red line ever since all-time highs that we've been consistently getting rejected at. If we break above this, that's going to be somewhere around 270 right now, 275, something like that, maybe 280. But anyway, 270 to 280, anywhere between that range. If we break above that, that also triggers a breakout of this overall downtrend we've been in for so long now, ever since all-time highs, all the way back in November of 2021, pretty much 2 years ago now, right? We've been in this downtrend for 2 years. And this will break that downtrend and also, in my opinion, trigger a bullish reversal rally. 2 major things, both catalysts are there, and they both have roughly the same general breakpoint level to like break above in order to trigger. So it'll be like a double trigger, a breakout of the downtrend and an execution of this inverted head and shoulders. All I'm going to say is if that happens and we execute that and it starts happening, I wouldn't want to be short. I would not want to be short Tesla. That's all I'm going to say. Of course, a lot of things can happen, and it's absolutely not guaranteed to happen. Many things can go wrong still. But if it does happen, that is a thumbs up, right? That is a massive thumbs up. That's kind of the main things I'm looking at right now. The 65-minute chart is not really giving me too much information here, to be completely honest. That's why I'm not talking about it too much. You know, the RSI is kind of like whatever. It's not really giving me anything obvious. So I'm not really paying attention to it, to be completely honest, right? The MACD is, I guess, kind of bearish, but nothing substantial in my opinion. So all in all, the main thing I'm looking at, ping pong between those two, right? The 21 EMA and the 50-day moving average. Quick little ping pong between those two before we break out. I think it'll be to the upside if we break above 240, to the downside if we break below 225 and especially 222. And from there, we'll continue on in that respective direction. But that's kind of what I'm seeing and what I am expecting. So with that being said, thank you so much for watching. If you enjoyed, don't forget to hit that like button in our membership section. Again, the link is down below in the description of the video, just for $3 a month. This is the kind of information I try sharing with my members, but live throughout the day as I see it, as I think of it, etc. And yeah, so thanks for watching, and I'll see you on Monday. Peace.